once you get into that true parabolic, you're going to cover, 1,000, maybe even 2,000 S&P points in a matter of a month or two. So, it can happen very fast once it gets going. And so there's going to be demand for all these commodities, in particular energy. And so natural gas will go through the roof, oil will go through the roof, copper will go through the roof, every base metal will go through the roof. Gold and silver will, I predict gold will go to 20,000 and silver will go to 400 to 500. The secular bull market that started in August of 82 is a view I've had for quite some time. A lot of people disagree with my timing, but I use that as the start date for the secular bull market because that's really when disinflation kicked in. We had the hyperinflation in the early 80s. Volcker came in and with a lot of work got it down, and it ratcheted down over the last, 4 decades. And it was that bringing down inflation and bringing down interest rates with inflation, or interest rates follow inflation down, that leads to higher price earnings multiples. It's kind of an inverse relationship. And so really the wind at your back that whole 40 years, or most of that 40 years, was the fact that we had disinflation, and with disinflation, lower rates, and with lower rates, higher price earnings multiples. So we went from a single digit market multiple in 1982 to, obviously, we've gotten up over 20 in the last few years. So, that's a big part of that long bull market. Obviously, you've had earnings come along with that. But I think we're at the end of that. I think this is the last hurrah before we begin a secular bear market. And so that's all important context, I think, to understand why I talk about a melt-up, because melt-ups are not something we see very often. We had a melt-up in 29 before the crash, 1929. We had a melt-up in the NASDAQ in 1999, 2000 with the dot-com bubble. We probably had you could describe the Nifty 50 1973 bubble as a melt-up because it had a big move there in a short time. Melt-ups are a parabolic move at the end of a cycle, is how I describe it. And we had a melt-up, by the way, in 2020, 2021, when the market doubled in 21 months, or more than doubled. I get a lot of people on Twitter saying either the melt-up's already happened, and I agree we had a melt-up then, or you've been calling for a melt-up for a long time. When are we going to finally see it? I said, well, this isn't one melt-up. We had a melt-up in 2020 and 2021, and then we went through a short bear market last year, and we have one final leg in the secular bull market that's going to be steeper than 2020, 21. So it's hard for people to understand that, because melt-ups are rare, and we're going to have two in a 3-year time horizon or time period. So I think it's easy to get confused by that and think it's we're still waiting for that melt-up, but we had one. Would I have foreseen that we'd have 2 in 3 years? No. But you go with what you see. And what I see in my work is that and I've been saying this, as you know, for much of the last year, that we will end this thing with an even higher high and a final parabolic melt up into a top. So I think that's where we're at. Obviously, we saw a bottom, or I think we saw a bottom last October, and up until very recently, most people disagreed with that. Most people thought we'd see lower lows, that this was just a bear market rally. You're just beginning to see a shift in investors and in pundits to beginning to realize this is a new bull leg. This isn't a bear market rally. This is a bull market. So that's the beginning. It's still, they're kind of on the edge. They're kind of riding with the momentum right now. Some might be throwing out a return to the old high of 4,800 in 2021. But for most of them, they still are not ready to jump on board and say this thing's going off to the races to higher highs. So they're going with the momentum, but the skepticism is still underlying. So that's good. I believe, obviously, that the melt-ups this year. Could be by October. I mean, I've been kind of using that as a time frame, end of summer or early October. I think that's very possible. But as I tell people, trying to time the end of a 41-year move, I could be off by many months, and certainly look for this to happen faster than it has previously. So I'm not so worried about exactly when it ends, but I do think it's coming. And I do think once you get into that true parabolic, you're going to cover, 1,000, maybe even 2,000 S&P points in a matter of a month or two. So, it can happen very fast once it gets going. The hard question to answer right now is, are we in the melt up and where it's going to just keep feeding from here and without any big pullbacks, or are we going to see, once we get up to say 4,650, 4,700, maybe even 4,800, are we going to have to take a rest and see a consolidation that might be 5 or 10%? And I can't answer that. I think we're just going to have to watch this next couple hundred points and see what happens. It's looking a little bit like pullbacks are going to be short-lived. They might be 5% pullbacks and not 10, and they might last a week or two, because what we're seeing is in these recent pullbacks, the investors get bearish pretty quick. I mean, there's an underlying lack of conviction in this rally. I mean, they are jumping on it because they're worried about missing it. FOMO's kicking in. Mm-hmm. But on the other hand, the minute it turns south, out they come again. So, starting to talk lower, not necessarily back to new lows, but they get nervous. So that's a good sign. That's what I call the wall of worry that will keep sustaining the rally. If you get everybody bullish and their convictions are bullish, they've already acted on those convictions, and you can top out. As long as people are still nervously in there, there's plenty of fuel for much higher. There'll be new leadership in a new bull market, a new cyclical bull market. Every cycle has different leadership. This one was led by technology. It's been a great run for particularly the FANG type stocks, the big cap, but also the small cap. Tech has done very well in the last, since 2009. Cyclicals have not done so well. And what I think you're going to see next cycle is a huge commodity cycle. So, it'll be different leadership. So there's going to be demand for all these commodities, in particular energy. And so natural gas will go through the roof, oil will go through the roof, copper will go through the roof, every base metal will go through the roof. Gold and silver will, I predict gold will go to 20,000 and silver will go to 400 to 500. Yeah, I could be wrong, and it only goes 15 or maybe it goes to 25. I don't obviously have a crystal ball about the number, but that gives you a magnitude that I think is in the ballpark. And silver will be, will outperform gold. So, because for the same reason that we're going to have this massive money printing, and it's going to lead to this. So we've started a run here. I mean, it's pales by comparison to that cycle, but I'm calling for 3,000 gold before the bust. So in the next 8 months, I think gold can get to 3,000. I think silver can get to 60. So there is a run here first, but then they get hit in the bust, like all assets are going to get hit in the bust. And you're going to get another opportunity to get into them, hopefully, sometime in 2024. So for those that are worrying about the 2030s and what do? I go, what you do is you get yourself into the commodity area after the bust and ride it. Just like if you had bought Apple 10 years ago, or if you had bought, Tesla 10 years ago,